Good morning. We'll take care of that, McGraw. I'll take a look at it. Give me a second here. Okay, so yesterday, right, we had the uncertainty coming in about Iran and the markets, so on and so forth. And we talked about whether prices would go up or down or whatever, and the trading range here, which actually evolved into what we now have as a trading range. You're looking at the hourly chart. So yesterday's rally was impressive and created this wide range bar that we have here. And looking at the futures, of course, we'll get to the spiders and so on. So now what we have is a pretty common situation, meaning we've got this wide range bar, and wide range bars can happen in different ways, meaning do they happen on a breakout, which was what we had here, wider range bar and a breakout. But what's common between wide range bars is that they create these price voids underneath. So one of the ways that we explain them is that they're powerful, that kind of a rally that creates a big bar like that. But it's the weakest link in the chart. And you say, well, how can that be if it's so powerful? Well, obviously it was created by strong demand. Now, that strong demand has created what we call a void, meaning there's no support underneath it. And you could see how clear that is, based on the rally from yesterday, that if you were looking at any chart, you would look to the left and say, well, where's the prior swing low? Where's the prior high that was resistance that now should become support? And when you look at this chart and look at what's directly to the left, there's nothing. Now we can cross beyond what's directly to the left and look at like a high like this. It's a bit subjective. And just to point out here, see this little consolidation right there? That was actually the reaction to that high. So as prices begin to come down, that's what's going to be reacted to. That's the subjectivity of what we call minor support. But when you start to get into multiple time frame analysis, you come to understand the subjectivity of going beyond what's directly to the left, and understanding what is to the left is what the real should be real support. And you can see the reaction to it right here. Pretty obvious that buyers stepped up at that point and tried to push prices higher into this heavier price resistance here. So one of the comments I made in the room toward the end of the day yesterday, when prices were up here, was like I said, this is where the heavy lifting is going to begin. And that's what's going on right now. So because there's no support here, it has to create support. And one of the ways that we do that is through understanding pivot highs and pivot lows. And you can see this rally here, there are no pivot lows. So that is a visual representation, the structure of this price information here that communicates the strong rally that happened at that time, meaning it doesn't create any pivot low because there's no pullback, there's no consolidation. So this now, what has to happen, and of course, in the 60-minute time frame, it'll happen slower than if we were looking at a 5-minute. Of course, I've got a 15 down here. But at some point, what needs to happen is it needs to create a pivot low, which we define as a bar with 3 higher lows to the left and right. Why 3? That's what I picked. It works. It's in between. If I say 6, well, that's a lot of bars. And if I say 1 or 2, that's maybe not enough. In any event, we have to make some choices. So we don't have any pivot on the hourly. We don't have any pivot on the 15. And now prices are starting to trend down. Where will it stop? Well, in reality, nobody knows. You could get out your fib retracement lines and get into that kind of subjective analysis. You could start drawing trend lines, Gann lines, channels, Bollinger Bands, and, end up in a mental ward, a state of confusion. I'm exaggerating, but I like to talk about things like that because it's just not part of our method. It was something I studied years ago, and finally the light bulb went on and said, take that hocus pocus off the chart and let's really understand, what prices are doing. So this little congestion right here could be the turning point. These little overlapping opens and closes, which are going to be a base in a smaller time frame. So on the futures, this 3230 area, 32 area is where buyers should step up. That's the next reference point, as we can see on the 60-minute chart. So, that gives us a point to monitor as prices are coming down. Now, what if they don't get there and they pivot? Well, as we're looking at the 15, well, that's new information that would allow us to make adjustments to our analysis. So we'll just wait to see what's going to happen. So he's saying until there is a pivot, there is no turning point yet. Absolutely correct. All right. So I know you're stating the obvious, but you want clarification on that. So absolutely, until there is a pivot, there cannot be a turning point. So we're waiting. Now, you could go down to, and I'm going to an extreme here, and you could say, well, what if I go down to the 1-minute chart? I'll find a turning point. Absolutely, you will. But the reliability of a turning point on a 1-minute chart versus a 5 or a 15-minute chart is going to be less reliable, and just by definition of a smaller time frame, more likely to get whipsawed. But again, that's a choice. However, let's assume that it gets down here to our reference point on the 60-minute chart, and now we see a pivot form on a 1 or a 2-minute chart. That would be intelligently using multiple time frames and then going down to a smaller time frame of choice if you decide to do so. Is that part of your trading plan? Right? So that's how you would combine multiple time frames intelligently, picking a stronger reference point from a higher time frame and then moving down to the lower time frame. Now, as it is right now, we've got this void. We're waiting to see if it actually can make a turning point, but now it's beginning to create this resistance area, or creating a stronger resistance area up above here. And as we discussed, yesterday was, well, this correction that began on this day when our market internals triggered that, or just they didn't trigger the corrections. It gave us a heads up that that's what was coming. And so now this breakout to new highs has now initially failed. We had the rally yesterday, and here we have our trading range that's going on. And until it breaks out or breaks down out of that trading range, this is where the markets are stuck, right? So we'll see. We'll just have to see what happens. Now, we'll go on to other markets and see, do we have any information to suggest anything different? And if everything's the same, well, we're pretty confident that this is what we're going to deal with for the time being. So the NQs here, we do have something different, meaning it's holding up a bit better. We've still got the trading range that's going on. Right? We've still got that range and we've got the void, but this isn't pulling back as much as the S&Ps. So that's a positive, and kind of, for the moment anyway, leads me to think that this correction that our internals gave us a heads up on, for the moment, may lead to a sideways correction, which would be bullish versus a time correction. I mean, a price correction, a time correction versus a price correction. But we'll see. We'll see what today brings. We'll see what this bar looks like at the end of the day. Right now, we've got a resistance area where sellers are stepping up. Makes a whole lot of sense. We'll see where it goes, whether it pivots, whether it goes sideways up here. And just historically, after a wide range bar, they're often followed by narrow range bars or consolidation days, right? Which is a positive. Strong rally creates the void. Sideways consolidation day builds potentially a new area of support that could launch prices going higher. Of course, because this is trading here, it also could launch it going lower and go right back down to the bottom of the range. So patterns like this is one in which, you stand aside and wait for better information right? Like what we call a 1, 2, 3 continuation pattern, some type of pattern here that says, hey, this consolidation that's going on, right? Even though the way things came down initially on that Iranian news, things are kind of working out more bullishly than what they appeared to be at the time of that move lower. YM, right? Pretty much the same story. A little bit of, I guess, relative weakness versus especially the NQs, somewhat similar to the S&Ps, but you can see, the attempt to move higher that failed, and now it's coming down, and now buyers and sellers will battle it out and see which way things are going to go here. Russell, we know it was weaker, and one of the things that we've talked about is in price structures, meaning how prices move. Are they fluid? Meaning, do the opens and closes about the same area on the new bar? How does it move up and down and back up again? And now you can see all the tails and overlapping bars that are starting here. And that's a picture of uncertainty that has occurred because of the news. So we'll wait for things to settle down as it relates to this time frame, and when it does, from wherever it does, then we'll know that certainty is beginning to flow back into the markets. Oil, right? We talked yesterday about, when it was up and with this wide range bar here, I said, well, it's coming up into the top of the range. Makes no sense to be thinking I should be buying, right, some type of a continuation pattern, which could have been a 1, 2, 3 continuation pattern on this time frame, but the weekly shows us that it's up into the top of the range where it's failed before. So a tradable pattern like a 1, 2, 3 is a starting point for trading decisions, but it is not a strategy or method. So if that was to happen, say down here, right, where it's in the middle of the range and it looks like you can go to the top of the range, that makes sense. But that same pattern, that 1, 2, 3 at the top of a range, does not make sense, right? So the method that we use, a lot of it is just common sense, which you realize after the fact of being taught it. Bonds down here a little bit, right? Consolidating, right? They hit this resistance area over here, right? We always say just look to the left, right? No fancy indicators, fib lines, trend lines, and such needed. You look to the left. It failed here before. Expect it to fail again. See what actually happens. And this weekly chart, I think this was a long downward sloping consolidation into this prior support. And now we got this bottoming tail from last week and it's consolidating. So we'll see how this plays out. Ideally, this is going to stay from the bullish point of view. This will stay up in this area and chop around in what we call absorbing supply over here. Bullish price action at resistance. And then that would lead us to the belief that prices can go higher here. So if bonds are going to go higher, right, yesterday we talked about interest rates going down. And if interest rates are going to continue to go down, something's wrong. Meaning, why is there no demand for money, right? So there's this concern, which yesterday seems like, oh, who cares about this Iranian thing? And, everything is just fine. But if everything is just fine, as far as a long-term view of the health of the economy and things being fine, interest rates should not go a whole heck of a lot lower from where they are now. They could be in a trading range. That would be just fine. But if we saw them beginning to collapse here and bonds really exploding to the upside and oil likely going lower, something could be wrong. We'll see what actually unfolds. Gold up here a bit. Had a heck of a run. Just makes sense that it would consolidate a bit here. So it still looks higher. And up at resistance, right? So a little bit of relative weakness for silver, but it's consolidating here. And you see the tails that are forming. So small candle bodies and tails, uncertainty. Right? Over here, it's like, yes, go for it. It comes up into resistance. And now sellers come in. It's got to begin to build up again, a new launching pad. And hopefully it doesn't collapse back down into the range. So this is, the unknown as to what it's going to do. But again, the higher time frames are supportive of a bias that it can work out and then continue to go higher from there. Transports, what they do yesterday, right? They didn't have the big green day. We're still waiting to see if they could join the party. They're still within their trading range so far, holding up near the top of the range. Looks okay. We got a bottoming tail bar yesterday, but overall, this is just a pattern to stay away from, right? And wait for some event, something to suggest that maybe it could break out. And from a point of view of the markets going higher from here, we want to see these transports begin to bring up the rear. Spiders, right? There's the wide range bar, on the gap down. And, that is clearer here just because you don't have the 24-hour trading as the futures do. So it was a gap down into support and buyers stepped up, right? It was like, who cares about what's going on there in Iran? This was a buying opportunity at support. And then that just began to feed on itself. And so the weekly charts are still a bit extended as this. And so we'll see if this can continue to build this trading range and get this correction through time versus price, which is what yesterday is suggesting for the moment is, a big green bar like this. You're saying, hey, this might need to go sideways for a while. And you see the gaps in range expansion. So, traders are trying to figure it out at this point. From a technical point of view, right, we know that between our internals and the extent of this move from the October low, that the market, just common sense, needs a little bit of a rest. And so far, its resting is bullish until proven otherwise. Qs, same story, right? Trading range, same, nothing more to add to that. Russell pulling back a little bit more. Just had relative weakness. It's still got room to reach the top of its trading range. So this so far is just a bullish consolidation, little downward sloping correction, with the assumption that since this broke out, it'll continue to move higher. Internals now are probably neutral, Tony. Yes. So still a little bearish to neutral. They're working off the extreme that occurred here. So this really doesn't tell us much, right? And I don't try to read too much into this other than to say they're not in an extreme. And right, so they're not as bearish as they were here. Markets are correcting. A lot of times this McClellan oscillator, this breadth internal, as it gets towards zero in an uptrend is where buyers will often set up. We got that yesterday on the gap down. So, in a bullish trend like this, sometimes they just go sideways. So we monitor it day to day. If the market, for whatever reason, let's assume that today ends up with a big red day, right? And so bar by bar analysis. What if today the market sold off and closed below yesterday's low? It doesn't take a genius to figure out, well, that's not a good thing, right? After a big green day. And that would lead us to think that the markets are going to go lower towards some support. We'll see what actually happens. And if that does happen, well, these internals are going to work their way toward the bullish level. All right, let's get done here so Dan can follow up. We already looked at the transports. I guess that's about it. We got a trading range that's going on, a correction for a time correction for the time being. And, we look at our individual stocks to see what they're doing. A lot of great moves yesterday that we were able to participate in. And so things are looking pretty good. There were some other upgrades today. Dan will cover. And so far, things look okay. All yours, Dan.
All right, good morning. All right, all our opens look fine, so let's go right to my interest list. Or if you have any questions on any opens, just shoot them at me. Macy's is actually one of our opens, and I saw it gapping up. We have a way out of the money put spread on this. I like the weekly, just it's bullish bottom, and that's why we shorted a put. But no setup for a new trade. Yeah, that's beyond. I have no idea if this is a continuation in a downtrend, but I would say based on available information, I'd say yes. It's in a downtrend, relative weakness. Here was a breakout failure that we actually had a bull call debit spread and made a small profit on it. New low. It's very, very tight, but you know, I don't know. But if it does swan dive, see these overlapping bars right here. I'd say it's coming down. This can fall another 10 bucks. Why not? Yeah, McGraw sent me some news on competition heating up for him. And but I actually thought it was going to gap up because I saw some blurb on CNBC about Burger King is going to try to use some of their junk in a breakfast thing. And that's what caused a lot of the spikes over the last couple of months when a company would come out and said, "Oh, we're going to try it." I know. Gango, would it make sense to short SPY credit spread 108, which is tomorrow? I don't know yet. I need more information. And yeah, we can come back and look at the actual SPX. McGraw loves that trade. It's, you know, one of his staples. So we look at it constantly in here. But as Greg talked about, you know, we're range bound here. Yes, we got a lot of resistance there, support. I need to see if this support's going to hold or if we go sideways, and then like at 10:30, let's say we either go sideways or up a little bit. And you remember the retracement concepts. I don't know if this tail is real this morning, but let's just look at the real bodies here. If it can't get over 50% of this and chops around and then makes a new low after 10 o'clock, then that's the point I would feel more comfortable. McGraw sent me this, PRO, breakout on the daily, weekly. He said it has unusual bullish option activity. And what that means is somebody is putting a big levered bullish bet on the stock going higher. So the rationale is somebody knows something, and that in and of itself is supposed to be a bullish sign. Now, I agree with that general principle only if the chart supports that view. And this one does. This one does. Nice wide range closing breakout. I got rising 20, 50. Look at those beautiful MAs right there. That's a beautiful alignment. So yeah, I posted that as a long. ARE gapping down 156. That's a bearish gap. It's not a tier 1, so I need more information. PayPal. It's one of my favorite gappers here. It's a gap breakout on the daily, weekly, but then I need a bullish entry. And I also like the bullish setup in the first 30 minutes to coincide with the pre-market data. So it's starting to come in here a little bit. Uh, 355, this thing's gapping up. Had a, you know, you missed your entry. It's nothing to do with it now. IDCC, I don't know if this was earnings, 56.60. It's a bullish gap, so maybe a put spread. I don't trade daily charts like that. That's just a picture of yuck. It's red, green, tails, whips, bars. I wouldn't be a trader if trades look like this, or maybe I would trade just based off moving averages and a line chart, because these candles are a total ugly mess. Pier 1 is closing 450 stores, having trouble with finances. That's obviously not a good sign. That could be on the verge of bankruptcy, who knows? But gapping down 20%, they're not having a good day. These two got downgrades, KSS and GPS, 49.60, no pattern, and that's a mess. And GPS, now this one, I like the wide range bar, and the weekly's trying to break out. McGraw, this is a definite put spread candidate. If it can go sideways here and close the gap, so it's negating a bear gap down, then that might set up for a swing. Boeing, we were looking at into the close. I think it's a possible put spread over yesterday's high for Friday. Today's Tuesday, so that'd be 4 days. I'm not confident of going out 10 days on this, but Friday I would. And it's holding here pre-market, so ideally it would take it out after 10 a.m. reversal. But that's a candidate. I mentioned earlier, semis are rocking. Look at AMD, MU, 55, M chip. Look at the SMHs, 142. So I don't know what's going on. I guess some of them might have raised guidance. Hey, NVIDIA, that's a little, you know what this reminds me of is almost that Netflix trade we did. How it came down, gap reversal on this little prior low. So this is a definite put spread candidate for Friday. I like that one. I'm going to put that in this window. But remember Netflix, see how it's a little bit similar? Gap down to this prior low. But NVIDIA chart was actually more bullish. So yeah, NVIDIA, McGraw, that is a beautiful setup. Why Intel of the week? No clue. Maybe well, my first reaction, Nick, when things like that happened, it's more fundamental related, meaning that what's good news for the ones that are having a positive reaction is bad news for the competitors, because it's like they're doing better in the space. And a new chip, they got the consumer electronic show. All right, yeah, let's do nothing here for 5 minutes at least. Spiders gap down. See, remember I said pre-market, I need to see what was going to happen right here. Yesterday, remember in 2 minutes I had a bias. I don't yet, so I need more information. But the fact that we are selling off here a little bit, I would say it's slightly down, but that doesn't mean to short it. There's a lot of support right there. Diamond's weaker. IWM is kind of neutral right here. Q's actually holding totally fine. Q's are fine. All right, we have put spreads on Netflix, Google, Amazon, and Facebook. Look at Facebook. It looks like an ad over yesterday's high. If this were to close like this, as this tiny, tiny bullish 1, 2, 3, that is a fantastic long over the high. Look at this bullish 15-minute chart. Wow. Yeah, I know. I think it was Flyman was we're in a put spread, but I think Flyman said he was also buying it as a directional. All right, I see PayPal coming in, so now he's not a tier 1 setup anymore. But Facebook, if the market decides it wants to hold here and start moving up, I think day trade Facebook is a go-to. Facebook looks very good right here. Yeah, I'm checking the video right now, but NVIDIA entry would be over the high. So I actually like the fact that it's coming in a little bit. Yeah, 230s, absolutely. Yeah, 230, 225.